Hello and welcome. We are at the NASSCOM National Technology Leadership Forum right here in Mumbai, and I have with me Mr. Ashwin Yardi, the CEO of Capgemini India. Ashwin, hi, thank you so much for speaking with ET Now. Appreciate you joining us.
My pleasure.
Ashwin, I want to begin by asking you about year 2023 because clearly it's going to be a lot more challenging than what we saw in 2022. What's been your experience speaking with the clients and how this year is likely to pan out?
So before I start with 2023, we recently announced our results, and just to give you the context, I think it was probably the best year we had in the history of Capgemini. A very solid, almost 22 billion euros of revenue, with growth of almost 16.5%. What sets the good trend for 2023 is also how our bookings have panned out. So Q4 was again one of our highest booking periods. We typically capture something called as book-to-bill ratio, and it was one of the highest at 116%. And also overall booking for the year was at 23.7 billion, again, which shows a very strong growth. So we ended the year very strongly, creating a very strong platform for 2023. At the same time, what we are clearly also seeing is there is some cautiousness with our clients, and of course they all are based on which industry they operate. The challenges or opportunities vary, but a lot of them are cautious, and I think that's the way at least the H1 would pan out when you see a lot of clients being cautious on how they want to spend, assess the macroeconomic, but also if you look at the bookings, what is very clear is there is a huge shift in the spend of technology, and I think that has a very long-term growth which will continue. Okay, and I guess that's what the NASSCOM event is also all about.
So book-to-bill is quite strong at the moment at 1.16, but incrementally speaking, how's the deal win momentum? Is there a bit of delay in decision making or any cancellations, etc., that you're witnessing at this point?
So again, the pipeline continues to be very strong. Okay, there is a huge amount of sales activity. There is some amount of shift on where the clients are focusing. So the shift is either looking at much larger cost-saving programs or looking at supply chain-oriented programs. Because that's something which most of the industries still continue to face as a challenge. So we do see trend of very strong sales activity. I would say there isn't such a confirmed trend which indicates people are deferring their deals. We continue to have a good momentum of pipeline and bookings.
Okay, so the momentum is strong at the moment, but given the headwinds that we are seeing globally, how's the competitive intensity in the industry? Is there a bit of pressure when it comes to pricing? Because last couple of years were a bit easier in terms of the pricing renegotiations, etc. What about what you're seeing at the moment?
It's an interesting question, and in my perspective, I think every company and every client would have slightly different context. You have two different dynamics. One dynamic is in general, the IT industry has seen a high cost inflation coming from labor. So with the strong focus on retaining the margin, there is a lot of activity to go for price increases, and there has been good success at times. On the other side, with all the inflation which our clients face, they themselves are very intense in looking at cost. So, so it's always a right balance on how you negotiate. But again, ultimately, if you're creating value for your clients, I think clients understand the cost inflation, and they're open to discussions.
Well, there were a lot of negotiations last year with talent as well, because attrition was on the higher side. The wage inflation, as you pointed out, was higher. Are things settling down now? And in terms of the headcount addition pipeline and target, what do you have in mind for 2023 from India specifically?
So what we've seen very clearly is the talent market has significantly improved. Attrition levels are significantly lower than what we saw previous quarters. Today we are still calibrating, how much we want to hire. So we have not shared any particular number. So at this point, I'm not in a position to share a number. But again, we continue to see strong, reasonably good demand, and we continue to hire both from laterals, campuses.
Well, last year, December quarter, there was the impact of higher furloughs that the industry talked about. Is there anything that you're witnessing in Q1 of this year so far? Anything in Jan, Feb that tells you that furloughs could be higher in this quarter as well?
Too early. Again, as I said, the only industry which has seen some amount of challenge in their own business, which is globally visible, is the tech industry. As in we've heard and seen what's in the industry. Besides which, we've not seen anything which indicates there will be higher furloughs. Again, probably too early to comment.
What about retail as a vertical? Because that's been seeing a lot of headwinds. A lot of BFSI, clients are also talking about a bit of delay in decision making, etc., whether mortgage, insurance, etc. Vertically, is there anything you would want to flag out? BFSI, retail, which is seeing a bit of muted outlook, and even manufacturing seems to be slowing down a tad bit.
So again, I think at this present only strong, I think we had one of the best growth years if you look at competitively also in financial services in 2022. If you check across the stack of all of our competitors, I think our financial services business did extremely well. Definitely where we are seeing near term some amount of softness on demand side is on the tech industry. Okay. Then it's usually very client specific, which geography they operate, what programs they were driving, and what's their current situation. So I wouldn't say there is a secular trend, but we have definitely seen something in high tech.
I just want to wrap up the conversation by talking about cloud and digital, because of course it was the growth rate was quite strong over the last couple of years given the low base as well. But going forward, do you see some sort of moderation there in cloud and digital?
So the shift is, firstly, the clients continue to invest in cloud and digital. But as you rightly said, the base significant investment of moving to cloud, for a lot of clients, I don't think everybody has done it yet, has progressed significantly. Now what the clients are looking at is how do they maximize their investments in cloud and digital. Okay, so either it's linked to using far more analytics, of moving to cloud, because now you have all of it together, and how do you get the better insights either for your customer acquisition, retention, customer profitability, or also for other parts of the business. So, the wave one of the cloud migration, I think, has reasonably matured. What we now seeing is how customers are trying to further get the monetization of their investments, and that continues.
Okay, on that note, we'll wrap up the conversation. Thank you, Mr. Yardi, for making time and speaking with us.
Thank you.